Hi, welcome to Business Time. I am Melisha. Remember to subscribe, like, and share. Remember, businesses have to make investment decisions, such as to buy a new equipment or open a new branch. The business is, of course, hoping to get more profit from the investment. In the previous video, we looked at the payback method, and now we will be looking at the average rate of return. The average rate of return focuses on the profit that can be made from a project or investment. The ARR can be used to compare the profitability of various projects over its expected life. It basically measures the overall profitability of an investment as a percentage of the initial investment. Let's look at an example and see how the average rate of return is calculated. Company A is planning to undertake a new project requiring an initial investment of $36,000. It is expected to generate $7,000 in year 1, $9,000 in year 2, another $9,000 in year 3, $11,000 in year 4, and $13,000 in year 5. Calculate the average rate of return of the project. Now, the first thing that we would need to do is to find out what the total cash inflow is. So we now need to work out what the total cash inflow is before we do anything else. Then, of course, at 0 year, it's not yet a year, so we would just write what the initial cost of the investment is, which is the $36,000 as we see in the question. Now it says that in year 1 we will receive $7,000 from the investment. We'll record that. In year 2 it says that we will receive right here $9,000 from the investment. In year 3 it says we will receive another $9,000, as you can see right here, $9,000 in year 3. So we put down the $9,000. In year 4, it says that we would receive $11,000. So you put down that $11,000 right there. And in year 5, it says that the company will receive $13,000. So we put that down. All right. The next thing that we need to know is to calculate the total cash inflow, right? So the total cash inflow, of course, will start from year 1, from $7,000. You would not include the $36,000 here because it's not an inflow. It's what it actually cost the business, right, to do the investment, what it would cost the business. And so you would add the $7,000, the $9,000, the other $9,000, the $11,000, and the $13,000, and so you would get a total of $49,000, right? And this is the total cash inflow. All right, good. All right, so remember, all that we have done so far is to add the total cash inflow. All right, and that would give us, for over the 5 years of the investment, would have gotten a total cash inflow, money coming in, equaling $49,000. All right, so the next thing, there are 3 key steps that must be taken for you to calculate the average rate of return. And as you can see here, step 1 calculate the profit, we must find out what the profit is for this investment, what the likely profit will be for this investment. To get the profit, the formula would be the total cash inflows minus initial capital investment. And who remembers what the total cash inflow is? I hope that you're following and you're processing it and you're trying to get the answer before I put it down, okay? That's the deal. So the total cash inflow is the $49,000. So you'd put down the $49,000 minus, subtract initial capital investment right here. What was the initial capital investment? It's the $36,000. Good. It's the $36,000. So what we will have here then is that the profit will be equal to 49,000 minus 36,000. So the profit will be equal to $13,000. Great. So remember, the first step is to calculate the profit. And to calculate the profit, you take away the initial capital investment from the total cash inflows. And the total cash inflow, we got the total cash inflow when we added all the inflows here that which came to $49,000, and then we take the $36,000, that's the initial capital investment, what it would cost the business to invest in the project, $36,000. So the profit would be $13,000. So the business would make a profit of $13,000. Good. We're getting closer to what the ARR figure will be, the average rate of return. Then there's a second step that you must follow, and that is to calculate the average profit. To get the average profit, the formula is the profit divided by the profit over the duration of the project. So in the previous calculation, we saw that the profit was $13,000. See it? Agree? Great. So we would put down our $13,000 divided by the duration of the project. And how long did they say this project will be for? All right. And how long did they say that this project will be for? 5 years. So the profit amount divided by 5. And so when you do that, 13,000 divided by 5, the answer you will get is $2,600. Whoops, $2,600. Yes, that's more like it. All right, so we're getting closer, right? So remember, the first step that we did, well, first of all, remember you need to find out what the total cash inflow is, right? So when you have calculated that, now you need to calculate the profit, right? So the profit will be total cash inflows minus the initial capital investment, and you've gotten the $13,000. So you know the profit for the project is $13,000. And then the second major step is to calculate the average profit, and we calculate the average profit by dividing the profit by the duration of the project. So 13,000 divided by 5, it's 2,600. So the average profit is $2,600. Now, the average rate of return, now we come to the real deal. The average rate of return, the formula for that is the average profit over initial investment times 100. Good. And we already know what the average profit is. The average profit is 2,600, right, over what is the initial investment. Initial investment is 36,000. That's over 36,000 times 100. Good. When you calculate that and you calculate that properly, you should get 7%. So for this project or investment, we're saying that the average rate of return is 7%. All right, so that's a simple way of calculating the average rate of return. Now, this is the second method that can be used when doing an investment appraisal, the average rate of return. In the previous video, we looked at the payback period. Hope you learned something. See you next time.